Good afternoon. This is my midday video. Hope my mic's working here. Intel breaking news just hit the wire that Microsoft is moving away from Intel chips. That's the chatter on Twitter. It is getting a relief bounce here. It might be fake news. You never know. But at any rate, it went from the mid-range of the Fib fam and completely decimated this stock. So, not a great situation for Intel here. Now we're starting day one of our month, April 2nd, and these are our monthly value areas, the ranges where we should be trading in. And I want everybody to realize the very first day of the month, and we're breaking down below what was our value area for the month. This is a horrible situation starting the month out. I fully expect what we're going to see here, and probably before the end of the week, we're going to see a mark of the 246.50 area on the SPY. It's going to be carnage in this market. Okay, on our cues here, like I said, day one of the month, we're breaking out of our monthly value area. We are still above our 200-day moving average, but we are right on there, right real close to it. So the Qs are holding up relative to the SPY a little bit better, but lots of damage hitting the market the very first day, trading day of the month, especially when you're breaking out of significant monthly value support ranges. IWM is a similar situation, but we do have, last month we put in overlapping value to higher, but this morning we were right at the bottom of the range, completely rejecting IWM, going back into last month's value area, and we're coming right up on the value area lows as we speak, trading below the 200-day moving average as we speak. So on a relative basis, we do have a little bit more support on IWM versus the other indices if you were to want to go long. Personally, I think you're nuts if you do. So to each their own, I guess, if you want to go long these markets. Your diamonds are just similar situation. We are breaking below our 200-day moving average. Day one broke below the past 2 months value. We're in price discovery here for the diamonds. So very easily we're going to, we have a real tight range about 5 months ago, trading range. So that could give us a little bit of support right down here at 232.91. Now some of our top flying ATR stocks, we have this overvalued breakout situation. We are coming down to a trend line support, and we seem to be catching a little bit of a responsive bid and overlapping value from last month. So we are not at monthly value area low, but we do have a trend line support we seem to be bouncing off of here. So we may have very well put in, awful close to be putting in the lows for the day on our the Qs. So just keep that in mind, that there is a potential that we've seen the lows for our Qs today. Despite the carnage today, and we are trading right at the February lows on Google, we do have monthly value right here, and this is typically what you would deem, until it breaks, you would deem this as a buy zone to the long side on your Google. So just keep that in mind. Be careful pressing your shorts going into the rest of the day, because we are entering buy zone areas for some of these high-flying stocks. Netflix is a different story. We have completely rejected this higher distribution area. We're into price discovery. We are right here. This is typically a short point for positions. So just keep that in mind. We are resting on some reference support here, but this is typically where you would short. If you're coming up into it, you'd be a short point. It's actually acting as support right now, but I would be very careful with Netflix here, because this is not the best situation for a long setup. There is outright carnage in Tesla today. We have a trend line coming up here. We haven't even tagged it yet. We could easily do it before the end of the day if this thing really starts to fall apart. But I kind of think we're going to see, we're going to be in the 240s come tomorrow in Tesla. We're probably going to gap down and even more bad news, probably more downgrades and stuff because Tesla is just uh, spending money like it's going out of style. And if the analysts are going to downgrade any stock, Tesla's going to be it because um, what's happening is, especially with the corporate bonds, they are just getting annihilated with Tesla. So just remember that the cost for their debt is soaring right now, and that is it's a extra negative towards this company. Not to mention Elon coming out and acting like there's no problem, and investors just don't like people with that kind of attitude. Okay, Nvidia. I think this thing is totally, considering the recent news we've been having with the driverless cars and the Bitcoin and everything like that. I think this thing is completely and totally overvalued. And when the earnings come out, it's probably going to come out saying that they were getting like 5 times the valuations for their chips because of the high demand. And I think that demand is going to dramatically disappear here real soon. Now we are still inside of our daily cloud, but we are below our the past 2 months value. Okay, so we are in price discovery mode here. So we do have a value point of control 3 months ago. So you need to kind of wait until you get some sort of confirmation below the cloud and stuff before some responsive selling here. But very bearish situation in my opinion. Another one I'm watching, which I just took a trade on it and did really well, that's Boeing. We are at the bottom of our monthly value area as of today, and we are at the bottom of the cloud. I mean, it's just a hair's breadth before it's into price discovery mode, which quite likely we're going to gap down tomorrow, and we're going to start seeing. This is one of them that's probably going to be testing at least the 310 area, if not lower, here real soon. Okay. Some of these I don't trade, so I'm skipping down a little bit. But Goldman Sachs here, looky here, we're breaking our 200-day, and right now we're putting in prices below the February lows. Very bearish situation. We're completely out of our monthly value areas for the past 4 months. We're coming into here to some support, some reference support at the highs. But like I said, this doesn't really act as support. It acts as resistance on the way up. So very easily we can break down back into these prior value areas. And so that would give us our next point of control would be the 241.70 area, between 241.70 and the 239.20 area. That's the areas of some significant value, in my opinion, for Goldman Sachs. And then here we are also. You got Baba, which has been seeing all kinds of call activity. Even this morning they were loading up on the call side. But we are pushing out below the monthly value as we speak. And we do have, we're within striking distance of the 200-day moving average. So just keep that in mind. And we are breaking away from our first fib zone. As of today, we are gapping down away from that. This is typically a continuation pattern down to the 200. So just keep that in mind. We're easily going to lose, possibly lose $5 in the next day or two with Baba. There's complete and total carnage in Baidu. Important to keep this on your watch here. You know, we're going to be coming back down to the February lows here probably tomorrow. So just keep that on your watch, if not today, because I mean, we could get a late afternoon dump, and a lot of these are going to be tagging these reference levels. And I say there's a pretty good chance that could happen. Now, you have your Facebook, but the value area is so large because of the recent downtake. it's not quite participating with the sell-off as strongly as the some of the other stocks are. So just keep that in mind. You know, whenever you have a tighter monthly value area, that's whenever you get a more dramatic squeeze and continuation sell-off. Facebook actually, you know, if I was looking for short opportunities, this is actually a buy point for Facebook to the long side. If you were looking for long side opportunities, and I'm personally not, but this I would be extremely careful with Facebook to the short side. Wynn Resorts is holding up really well here. We're back down to our monthly value point of control. We had a very strong open this morning off of very strong Macau numbers that came out over the weekend, and the casino stocks have seen some really strong uh, call option inflows. And if the markets hadn't been down, this thing here was going to be going back up to 190 today. So this is the casino space is still an area you want to be looking more towards the long side. Um, in this risk-off environment in the markets, personally, I think your better opportunities are still to look to the short side. A quick rundown: Humana and Walmart, they announced a partnership agreement today, and we don't know the details about it and everything. But this cannot be good for Walgreens or CVS pharmacies. Okay, so if you're looking for short opportunities, you would want to short Walgreens or CVS, and the upside potential here is it's a lot more risky to try to take an upside risk in Humana or Walmart in a bear market than it is to take a bearish position in Walgreens or CVS, in my opinion. And I'm going to finish off with one of my last trades that I did today. Very happy with the results. I came up to the double bottom right here, and like an idiot, I got out. So I could have almost doubled my gains from the sell-off since the complete total breakdown. But First Energy filed bankruptcy. It's a coal company, and they have Caterpillar has some large accounts receivables with them, plus there are pending orders and stuff. So with all that situation, they have a lot of exposure to this bankruptcy. So this is a complete breakdown. We're probably going to come down below the 200-day moving average on this. It's been acting very weak for quite some time now. We're looking at the 135 area for a potential support for Caterpillar. That just gives you some of the stuff I'm talking about. I really think we're probably going to see, before the week's out, we're probably going to see a cumulative loss of close to 1,500 points on the Dow Jones Industrial Average this week. The sell-offs we've had so far have been kind of, down 700-800 points, then rebound. I think we've actually crossed over into the first of the quarter and everything, where you're not going to have any type of end of quarter window dressing, and they're going to let these markets start falling pretty quick now. So if you're going to trade, I would definitely trade on the short side. Thanks a lot.